Welcome back to Ferocious Education. This is Zed. Today we're talking about Clover Health, taking into consideration everything that is new and diving right into that. So let's jump right into this one. So Clover Health, I covered this one before. You'll find my previous video in the description below. Nonetheless, I'll give you a quick update on everything that's been happening, plus a technical analysis perspective. So I already covered Clover Health before with their Medicare plan substitutions, their providers, and everything in between. But nonetheless, today we're going to be looking into a few things. First is the projected financial results. And when we're looking here into when they're going to go towards net positive, they're estimating that that is going to happen by 2023. Alright, so we get a bit of a perspective there. We want to look into their current revenues comparing 2020 to 2019. 2020 current net revenue, or total revenue, total revenue first comes in around 672 million compared to 462 million. That's compared year over year. Now, total expenses are seen a little bit of an increase in 2020 compared to 2019. And you get to see that the net loss here is 136 million compared to 363 million. So that's definitely a pleasant move upwards towards from 360 millions to 130 million. So that's a positive thing. And in terms of the comparisons here that we have, we get to see in terms of the metrics, we're on the way to get towards that net positive by 2023 if they continue to show that strength and improvement in terms of their books. Now, another thing here, something a little bit of concern is that their total assets currently sitting at 267 million and current total liabilities are sitting at 432 million. Now, a big part of that might actually be towards their new or SPAC proceeds not being included into here yet. So we're going to give that the benefit of the doubt. So we're going to move on a little bit further towards this block of information here regarding the fourth quarter. During the preparation of our audited financial statements for the year ended December 31st, 2020, including finalization of the accounting for the January 7th, 2021 merger described in the earning release. Again, that January 7th, 2021, it's because it's in January, not 2020. That's probably why their total assets doesn't reflect the cash proceeds in addition towards their also PIPE investments. So they should have enough money for total assets to pay off all their debt anyway. And subsequent to the earnings release, we recorded an adjustment to our non-cash gains loss on derivatives reported on our consolidated statements of operations. This adjustment relates to the valuation embedded derivative featuring of our convertible securities outstanding on December 31st, 2020. And varying the treatment of each tranche under applicable derivative accounting for guidance. So here comes the information. For the quarter ended December 31st, 2020, an adjustment decreased the gain on derivatives by $44.8 million from $51.1 million to $6.3 million, with a corresponding increase to net loss $81.6 million to $126.4 million for the same period. In each case, as compared to the financial information represented in the earning release, for the year ended December 31st, 2020, the adjustment decreased the gain on derivatives from $44.8 million to $138.6 million to $93.8 million. With a corresponding increase to net loss from $91.6 million to $136.4 million on the same period, in each case as compared to the financial information presented in the earning release. And so that is definitely after being audited, etc. So there has been some discrepancies there and they are fixing that. So impacts on financial outlook. We expect the adjustment described above to result in company's expected non-cash gains on derivatives for the 3 months ended on March 31st, 2021 and the year ended December 31st, 2021 to be materially higher than previously reflected in the company's full year 2021. So it's not going to really affect things. It's not like a fraud case here, but it looks like there might have been a bit of an accounting error and they're adjusting that through the statements here. And a couple of things that I do want to mention here is regarding this. Some people message me saying, hey, are they having $330 million in terms of an offering? Well, this is a shelf offering. Things like notes that are expiring later on, etc. And yes, this would go down for breaking down to different levels, including here, for instance, 214 million at 748, 17 million at 887, 5, and 17.7 at 636. That's a maximum offering price. But you also have as well, restated by the 2014 equity incentive plan, you're looking at 81 million, almost at 226.7. Now that is definitely not towards that's not all towards the public. It's not an offering. This is multiple things to be used from the shelf. And we're going to move on here, and this is something that I believe the short seller has mentioned before, so keep that in mind. As previously discussed, Mr. Bermudez maintains an ownership interest in B&H Insurance, an insurance brokerage firm he founded with a partner in 2011 before joining Clover. As described in the original post, Clover directly contracts with a field marketing organization, FMO, named Ryder Insurance Marketing. B&H Insurance is one of many downline agents from Ryder. Now, which means that the B&H and its agent sell Clover plans through Ryder as well as none other Medicare Advantage plans. We understand from Ryder that from 2017 through 2020, B&H Insurance received from Ryder roughly $400,000 a year for Clover-related products. As noted in the original post, from period 27 to present, Clover has paid roughly $160,000 directly to B&H Insurance, $125,000 of which is an incentive payments made in 2021 for hitting a present enrollment bonus pursuant to an incentive plan in which other agencies also participate in. We understand from Mr. Bermudez that over the last several years, he reported an average roughly off $170,000 a year in net income from B&H Insurance. The company has concluded that the income received by Mr. Bermudez as a result of his work for Clover is compliant with the CMS regulations and rules. Based on the discussion with the company, Mr. Bermudez has agreed to divest himself from all interest in B&H Insurance to avoid any potential conflict of interest. So there might have been potentially some conflict of interest. They divested from there, and now it also had been cleared by the CMS rules and regulations that there's no for certain issue there. Now comes to the question before moving on towards the SEC investigation updates. If you'd like to see more contents like this, make sure to scroll down, hit the subscribe and the bell notification button, drop a like, and if you'd like to join a Discord server, you'll find it in the description below. Totally free, no obligations. We just chat there all day and we have different chat sessions. Anyway, we can move on now towards two news actually before the investigation itself. William Robinson, president of Broadgate Human Capital LLC and former HR executive at General Electric Company, joins Clover Health Board of Directors. So they join there as a chair of the Talent and Compensation Committee. Bill's track record on building the leading world-class operation and HR teams for global company is unparalleled, said the CEO. His expertise and guidance as chair of Clover's Talent and Compensation Committee will contribute greatly to our success as a public traded company. Bill Robinson is a two-time public company chief of human resources, most recently serving an executive vice president and CHRO with Sabre, a leading software technology provider to the global technology and tourism industry. There, he oversaw 9,000 employees and operations in 60 countries and was a key leader on an executive team that took the company public in 2014. Previously to Sabre, Bill served as senior vice president and CHRO of Coventry Healthcare, with 14,000 employees there. And this is Sabre's website. Now we're going to move on towards the updates. And this one here, this was actually released on the 26th, and it says SEC kicks off probe into the $220 billion SPAC market, Reuters. And this one here, U.S. Securities Exchange Commission officials are starting to probe into the $200 billion for the SPACs and so-called blank check acquisition companies that have attracted scores for celebrities' endorsements while raising questions over the ethics of investing in Wall Street. And it even goes on as well. Reuters reported Thursday that the SEC Enforcement Division is seeking information from several Wall Street banks on fees, volumes, and interest control or internal controls in the so-called SPACs, Special Acquisition Companies, that have raced ahead of traditional IPOs as the hottest investment trend in the market this year. SPACs are essentially shell corporations that raise money from investors, listed on a stock exchange, and targets a company for an acquisition that is eventually merged into the existing listing. Nearly 300 SPACs have raised $96 billion so far this year, compared to $83.4 billion over the whole year of 2020. With another 230 waiting in the wings to add another $58 billion to the growing total. However, this trend has also raised significant concerns, and market watchdogs, etc. Last month, noted short seller Hindenburg Research accused Chamath Social Capital Hidesvia Holdings Corp of misleading investors ahead of its merger with Clover Health. And the main reason I'm mentioning this report here is that SEC is actually calling in banks and asking regarding interest itself, and that definitely shows an advancement towards this fact. It's not only investigating just Clover Health, it's also expanded towards just the general SPAC market. Now, we don't have public details yet regarding the exact details of the Clover Health SEC investigation that was launched back in February, but we hope to hear something soon about it. And comes in towards SEC filings, we did cover that, and now towards institutional buyers to get a bit of significance onto how they feel. Institutional buyers here, we see that there's a little bit mixed, right? On recently here in the last week or so, we have around north of 300,000 shares. On the 4th of March, we have 50,000 shares, and before then, it's been quiet for a while. A bit more sea of red of people throwing their shares away rather than adding, but things seem to be looking into another overturn with the last 3 positions being bullish. Now moving on towards technical analysis. Now, on the technical analysis one-day perspective, we see that the MACD here has gone back in traction towards the positive side. So that might be an indication for perhaps another resisting towards a bouncing back, so it's not really that bullish in general. Momentum is more off sloppy, still sitting at the level off below -1. And in terms of the ADX, it doesn't show much. William %R shows it's a neutral, and it's kind of just bland in terms of movement. 10 SMA is above 30 EMA, and that's a bullish thing, and so you expect positive reversals to occur within this channel between 883 and 771. In terms of the moving average bands, what you get to see here is 889 is on the top, 808 in the middle, and 727 in the bottom. Stochastic fast and stochastic slow are both bouncing back a little, indicating that this might actually be a bit of a good time to buy. Check where the next supports and resistances and see where they level at. Currently, the top we're going to go for level at 1724 and the bottom 631. We see the current and significant support here on the Fibonacci retracements is 631. Resistances are at 889, 1049, 1178, 1306, 1490, and 1724. Current price line action shows that the current support is actually at 736, moving below down to 696, and then down towards the level of 684 and 631. Significant resistances shows that the current resistance are at 768. Above there, you're looking at 797. Above there, you're looking at 825, 903, you're looking at 965, 1049, you're looking at 1135, and then up to 1239, and then up to 1308, 1376, and you're looking up to 1438, and then up to 1546, and then 1594. Comes to the question to Ed, what do you think about this one? Well, there's a lot of things put into consideration for this one. It's currently into accumulation and looks like it found very strong support around the level of the $7, the lower $7 range. And I think you might be in for a bounce. You know, the price over book for this one is attractive. They're still under SEC investigation, but we've gone through the reports before, and I don't think they've done any wrongdoing that is out of the market itself, behaviors in general. And nonetheless, a lot of these are just perhaps false acquisitions. And we see that one of the acquisitions itself, has also been cleared by the CMS. And so you think that these things are going to be fixing itself and nothing will, the results of the investigation will be out of nothing, but still a little bit risky, but I think there might be a bounce. What do you think about the sticker? Make sure to down in the comments below. Share, subscribe, and like. Have a wonderful day.